Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of both Bitcoin and Ethereum to take a look at what's been going on most recently and what we would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's get into this thing. Let's get started. What we're going to do is we're going to start things off by taking a look at the Glassnode data, the data that sits in the background of all of the charts, see if there's anything that we should be too concerned with or whether there's some positives to be taken from the background data. So let's jump on down into this. Okay, so this here is my Power BI report using the Glassnode Studio APIs. Hopefully you guys are familiar with this by now, and let's walk you through it. So up the top hand here we have our 7.76 million Bitcoin going onto exchanges with 8.08 million coming off of exchanges. This is for this year, so that's basically from the 1st of January 2022 all the way through to yesterday. Okay, so we can see that accumulation has been going on. Okay, so we've got a reasonable amount coming off the exchanges. Now we can see that also from the Bitcoin exchange balance, and here you can kind of see it coming down quite rapidly from the beginning of the year, actually more specifically around March. Okay, so it's interesting kind of stuff. Then of course on this side we actually have the net difference between the inflows and the outflows as a 30-day average. Okay, so each bar is a 30-day average of the difference between the inflows and the outflows. This is important not because of the number that it represents, but because of the visual graphic that allows us to easily see whether or not there's a lot of accumulation going on or whether things are reasonably flat. Okay, so recently we see a slight uptick just here over these last few average bars. This is basically telling us that things are starting to slow down in terms of the accumulation, and this is more important because we have started to pull back down, and as we started to pull back down, accumulation slows down, which is unusual because normally as price moves down you normally see accumulation. So let's go down to the Huddle Waves. The Huddle Waves are an indication as to whether or not people who have been long-term holders with Bitcoin are being shaken out of the space, starting to worry that maybe the price is not going to where they thought it was and are starting to sell off their holdings. Now, we've got several different buckets in here. We've got more than 10 years holdings. So we've got 7 to 10, we've got the 5 to 7 years, we've got the 3 to 5 years, the 2 to 3 years, and the 1 to 2 years. Now, for the most part, we don't see too much in the way of fluctuations. Let's walk through this. We go from 13.09 to 13.1. Okay, this is basically indicating the largest bracket that we have of over 10 years. This could be lost Bitcoin, to be fair, Bitcoin that's no longer accessible, lost keys, etc. So slight increase there. We have a slight increase on the 7 to 10 years as well, going from 6.42 to 6.45, meaning that we actually do have a decrease with the 5 to 7s as they move up a bracket, going from 4.95 to 4.94. Down here on the 3.2 areas, you can see a slight decrease as well. And I think this is pretty much because these brackets are moving up quite a bit as we went from 6.42 to 6.45, which is quite a large jump for the 7 to 10s, and we only see a 1% decrease or 0.01% decrease for the 5 to 7s. And looking at this one, we have the 13.94% going to 13.92%, but this one down on here, the 2 to 3 years, did not decrease. And so, you know, I'm looking at it and I'm thinking to myself, we've got less activity down in the 24 hours, and we've got slightly interesting kind of fluctuations within our 3 to 5s and 5 to 7s. So yeah, I'm going to say that I think everything's moved up a little bit rather than going down, with less activity down the 24-hour range. No change with the 2 to 3s and no change with the 1 to 2 years. So for the most part, I think the Huddle Waves are indicating that people are remaining long-term and are not being shaken out of the space. And as I said, there was less activity in the last 24 hours, going from 1.13% to 1.06%. So it's good to see that kind of stuff. Okay, let's move on to the next area, which is the inflows and the outflows. We pair these up so that we can see at a glance whether or not we've got anything to concern ourselves with. So when we spoke about this yesterday, we were saying 25,000 was going in and 26,000 was coming out. Yesterday we saw 21,000 going in and 21,000 going out. So everything's being matched up most recently. So low activity and not much going on. This is going to be a bit of the concern because as we started to think about, what was going on with Monday, for example, and we start to think about a new week ahead, we would normally expect to see a bit more of an increase in the activity here, but actually we're seeing less. So that's going to be interesting to see what happens today. We'll talk more about the kind of the here and the now in the charts next, but let's jump into the most important chart that I like to keep an eye on, or charts I like to keep an eye on, which are the dolphins, the sharks, and the whales. Okay, so these are three brackets of wallet size, over 10 Bitcoin, over 100 Bitcoin, and over 1,000 Bitcoin. Just bearing in mind that over 10 Bitcoin includes our whale data at the moment. I will eventually be stripping those out, so we get an absolute number, as in anything between 10 Bitcoin and 99.9 Bitcoin, for example. So we'll remove the sharks from the dolphin data, and we'll remove the whales from the shark data and the whales from the dolphin data as well. And that's going to be the aspiration. That's what we're going to be working towards. However, let's move on. So over 10, over 100, over 1,000, three wallet sizes. These graphs are for 90 days. Okay, this is not a 1 day view. This is a 90-day view. I can't believe I had to write that on there, but it is what it is. So we've got 90 days, 90 days, 90 days. Okay, so each one of these graphs shows the same time period. Okay, so this is important because we're going to be comparing the difference between the dolphin wallets and the whale wallets, for example. So we have to look at the same time frame, and we have to have the same prices for Bitcoin, for example, and all that kind of stuff. Okay, let's get into this. So 10 Bitcoin or more, what's going on? Well, as you would expect, with 10 Bitcoin or more, this is the high net worth individual, but still a retail investor in the way that they operate, in my opinion. We can see that there is a dip with Bitcoin, the Bitcoin price being orange. And as that dips down, the wallets increase. Okay, this basically tells us that they were buying the dip, right? Cool. The bottom came in, the local bottom. This is the bottom of... according to CoinGecko's price data, 19,000, but according to Binance's USDT pair, it's 17,622. This particular bottom right here. It doesn't really matter so much about the price at this point for what I'm illustrating here, but it does matter about when the bottom came in, or at least the last lowest point came in. Okay, now, from that note, it's important to see what happens. There's a lot of different influences across lots of different social platforms, basically saying the bottom is in, we're tracking up, it's fantastic, right? And as such, these guys really start to double down on their positions. Every single dip is another buying opportunity. Every dip is a buying opportunity. And even up until recently, with this really sharp decrease, which we know differently as a 5-wave structural trend to the downside, we can of course acknowledge that these guys are doubling, tripling, quadrupling down, and are piling in as that price pulls back down. This is an emotional response to price action. That's how I illustrate this. Okay, this is how I articulate it. And basically, they are in the kind of emotional state of, we're going to the moon, and every opportunity, the time the price moves down, we're going to buy. Okay, and that's why I call these guys high net worth individuals, but retail investors. 10 Bitcoin or more is a good aspiration for many. It's quite a sizable investment for a retail investor, but a retail investor is the behavior that is noted within the relation to the size of these wallets and the price action. Okay, the sharks, on the other hand, are very, very cool, in my opinion. I like these guys. These guys are more aggressive by following the price action. They basically want to make sure that they are completely aligned. I consider these guys traders, okay, professional traders at least. And what they're doing is they're following the price action, and they're saying, okay, here's a dip, we're going to exit our positions because we don't know where the next thing is going to be, where we have to come in, right? And as the price starts to move up, they're right, okay, we'll start to extend our positions, we'll take advantage of some of these dips, etc., right? And then, they're aggressively following this price action until recently. This recent dip to the downside, they accumulated. However, they've started to come back out of some of their positions. There might be a little bit of faltering here. Maybe some of them have stopped out if they're traders. Maybe some of them are starting to doubt this particular position and willing to take the L and to move on. We don't necessarily know just yet. But what we do know is there's a definite deviation away from the price action versus the number of wallets here, okay, and which is unusual for these guys, okay. These 100 Bitcoin or more are normally very aggressively following the price action, and this is a big deviation away from what they would normally be doing. Now, for this, I think they were absolutely spot on, because I'm expecting a big surge in the market to the upside, and I think they got a little bit ahead of themselves. Admittedly, I would not have started accumulating so high, but unless they were dollar cost averaging on the way down, I don't know. But accumulating in some of these lower ranges isn't too bad, because I do think there's going to be a swing to the upside for a short-term short-term burst, which we'll talk about more in a smaller time frame on the charts in a moment. So these guys are interesting. Big deviation from what they've been normally doing, and normally they're incredibly aggressive following the actual price action of BTC. Going over to the left-hand side then, the 1,000 Bitcoin or more. Now, these guys are calculated. These guys are strategic. These guys are the ones that I like to follow, okay? I like to think about what these guys are doing, how they are operating in the space, and how we should be on the right side of it, okay? So there's many different things we need to look at when it comes to the whale wallets, but let's dissect the same 90-day range. The price pulls back down, they de-risk with it, not as aggressively as they did with or the sharks did, right? The sharks were very, very aggressive with this, and these guys were slower with it. The bottom came in, or the local bottom came in, and they continued to come out of their positions, okay? They basically used the retailers and a little bit of the sharks liquidity to exit their positions, okay? So they sold into the pump is what I'm saying here. They continued to sell all the way up until pretty much the local high point, okay? A little bit on the went a little bit higher than this one here, which was about 23,800, but basically they stopped here. They started to basically just go sideways for a little bit of accumulation towards the end here, but not too much. That's pretty much a standard kind of thing that you'd expect as that price pulls back down for these guys to accumulate a little bit. But essentially, there's nothing noteworthy about this just yet. And if we are right in thinking that the price is going to move up, then I imagine that these guys are also going to use that liquidity to come out of even more positions, okay? So one of the things we should note here is that the billionaires, the multi-millionaires, okay, are not believing that this is the bottom, okay? They wouldn't sell down here at the bottom, okay? That's not how these guys operate, and we'll talk more about that in a second, okay? These guys are notorious for selling ahead of the bottom, okay, and buying ahead of the bottom. So actually, sorry, these guys are notorious for selling ahead of the top and for buying ahead of the bottom, okay? So let's talk about what happened in the last bull run when it comes to these whale wallets. Now, basically, I know I've gone through this a half a dozen times already, but for anyone who is new, you can see here, August 2017, they start to come out of their positions as the price moves up to the all-time high. This is because they have to sell into the pump. For the amount of Bitcoin they have, they need the liquidity of people buying it, as in there's always a buyer, there's always a seller. The whales are selling to the retail investor who is FOMOing in. It's a really straightforward thing to think about. Basically, as the price goes up, these wallets goes down because the last little push to the upside here for BTC in 2017 was the position, or was the method that these guys were getting out of their positions, okay? They were coming out, you were getting in. Okay, so once obviously the top is in, they kind of finish off selling off around about here, around their kind of 50% drop. Then they started to accumulate a little bit, but not too much. They kind of just go sideways for quite a period of time, right? And then basically in September of 2018, ahead of the actual bottom, they are accumulating. Okay, they're accumulating until the bottom is hit. Okay, now what's interesting about this? The interesting thing about this is that they sold you their Bitcoin to you on the way up as a retail investor, not you personally, but you get the idea, to the retail investor on the way up. And then on the way down, as you're panic selling towards the end, they're buying it back from you at a discount. They sell it to you at a premium and they buy it back from you from a discount. This is a calculated structural move, and this is kind of what we expect to happen time and time again. We see it all the time. So when we are saying that the price is pulling back down, I mean, you can see all these little kind of pullbacks right here, right? So the price goes up and the wallets go down, exit liquidity. Okay, here, for example, we can see that they're pulling back down. The price is actually going up here, and then about here they start exiting out of their position ahead of these local tops as well. And you can see it time and time and time again. So it's important that we understand how these guys are operating and what this data is telling us right now. This data is telling us right now that the bottom potentially is not in because these guys have not started to accumulate. These guys will only accumulate a few months ahead of the actual bottom. Okay, they want you to be in an absolute maximum pain before you are willing to sell to them at a heavy discounted rate. So the fact that these guys are coming out of their positions is not unusual to me. You see this with the stock market. You see this with, Elon Musk selling his Tesla stock, for example, because he might, quote unquote, need the money in the future, right? He's only selling it now to lock in the gains before the market moves down, in his opinion. I think the billionaires are subconsciously telling us through their data and through their actions, not their words, what they are thinking is going to happen here. There are a few people who are quite prominent in the space, not just crypto, but in the global economic standpoint, saying that this market is about to kind of collapse down on itself quite hard. And there's many different reasons and many different catalysts for that, okay? But one of the things that we can see here from the data is that these guys, these billionaires, the multi-millionaires, are essentially de-risking. They're coming out of positions, they're not coming into positions, whereas we can see aggressive accumulation from retail, and we can see price action and analytics from our sharks, etc. Okay, so we've kind of been through a reasonable amount of data there, and it's probably time that we jump into the price action of BTC. Right, take a look at what's been going on and what we would expect to happen next based on all of the structures using Elliott wave theory. We'll probably talk about a few additional things as well. So let's get into it. We're going to start things off here with Bitcoin paired up with USDT on the hourly chart, and Binance is the data source, okay? So as I kind of zoom out of this just a fraction here, we can, of course, acknowledge that there is potential moves going on in many different ways, right? So this is actually Binance coin, isn't it? Let me just move this over into here. There we go. So Bitcoin paired up with USDT on the hourly chart, and Binance is the data source, okay? So from here, we can see a couple of things, right? So if I zoom out, we have our three-wave structure move coming up to this high point just over here. Okay, and we can go ahead and just remove the fib there. We don't need that now. And we can see the breakdown. Now, the things that are vastly different in what we're seeing right now versus, where we were on this way up, okay? We want to talk about that. So this here is a three-wave structure, okay? A three-wave structure is corrective, okay? With all the overlapping moves that are going on here, this is not a trend. And that word trend is incredibly important, okay? Because a trend is basically a confirmation of a reversal in the market, okay, which we haven't had. We have not had a trend to the upside. And because we haven't had a trend to the upside, we've only had a corrective action to the upside, then our trend to the downside, although looks like it had finished down here at 17,622, still remains the trend that is in place because we haven't broken the trend, okay? So the trend down is still valid, even though we've moved up a significant amount here, about 43%, I think it is. This is not a trend. This is a trend, therefore the trend that preceded this, unfortunately, still is valid, and we are still technically trending in a downward motion until proven otherwise. The only way to prove otherwise is to have a significant trend to the upside. Okay, now trends are defined with Elliott wave theory as five-wave structures. Okay, so we were looking for was basically a five-wave trend upwards. Okay, and this trend to the upside would have been fantastic, right? That's what I was waiting for. Instead, what we've gone and done is we've gone and had a three-wave corrective structure upwards, okay? And three waves are short-term corrective patterns, as in they are not a trend. Okay, then what we've done is we've gone and done this. We've gone five waves to the downside. Now, five waves in isolation to itself, and at the scale that it's at the moment, is a micro trend. Okay, so it's a micro trend to the downside, not a macro trend or anything like that. So we should acknowledge that there's going to be some short-term trending to the downside to be had. However, nothing moves in straight lines. This is really important to understand, because when we start talking about moving in straight lines, you're going to get wrong, and you're going to get things wrong, and you're going to get wrecked very, very quickly. So let's dive down into this, right? So we have here a five-wave structural move coming down. I think we have to come a little bit lower before we can have a relief bounce. My estimates are between 20,145 and 20,524, and we've got a little bit of a coiling up at the moment just here, and what we're looking for is to bring this down. Now, looking at the scale of this fifth wave, I'm expecting this to actually potentially actually overextend. We might actually come down lower than this, right? Let me just show you what's going on. So we've got our hourly stochastic RSI, and this is bouncing around a fair amount. It doesn't really matter too much, but the 4 hourly is so high on this overbought area, it needs to pull back to the downside. The same thing for our 8-hour chart, right? These two 4-hour and 8-hour charts are pretty decent macro indicators that there's going to be some volatility to be expected, right? The daily is actually in a good spot, and we need to see that for the relief bounce, and the weekly needs to come down, and that will come in at a later stage. But the hourly is bouncing around a bit, but our 4 and 8 hours are giving us a pretty clear indication of what our expectations should be. Okay, and that is that we have run out of momentum to the upside, and we should be thinking about our downward momentum, okay, downward price action. Now, we can go ahead and draw trend lines on. You can draw as many of these things as you want. They're always going to be fiddly as hell, because they are going to, depending on where you draw them, become invalidated, etc. But for an illustration point of view, we can also see that this is a wedge-shaped pattern coming on in here, and there's many different ways that we could articulate it or look at it. Okay, so from this local bottom just down here, we can see ourselves kind of progressing up. Basically, the buyers are kind of getting a little bit more momentum to them. And then, of course, at the top, we have the same scenario. The sellers are gaining more momentum. This is going to mean that we're going to wedge ourselves into a really tight area. Now, if we throw the Bollinger Band on here, we can see that things were starting to get a little bit tight, not tight enough to be a huge contraction, so I'm keeping a close eye on that. We might just test that upper band a little bit, maybe pull back down a little bit, but what we're really looking for are contractions within the space, so that we can then start to expect to see those volatile movements. But right now we haven't got that. So what I'm looking at here is a potential kind of small 5-wave move here, potentially. We have our double bottom, so we go 1, 2, and 3 up here, and we've got a little bit of overlap. So it's really going to be interesting to kind of see whether this becomes an overextension. So one of the things I'm concerned with is that we end up with something that looks like this, and we come down lower, whereas I would kind of prefer a kind of more maybe ending diagonal kind of structural point where we just do something like that. That would be better, in my opinion, to finish off this 5th wave. So that being said, though, the 8-hour stochastic RSI has a pretty significant amount of room to the downside to be had. So we should be a little bit cautious around that. But for now, that's looking pretty good. Let me actually bring that back up. What I'll do is I'll throw on the volume here, and we can see what's been going on. So as we kind of pull back to the downside, we actually lost some volume here. That's interesting. That's pretty bullish right there. So losing that volume as we pull back is helping us stay within this range. However, if we start to really think about what's going on here, all the way from this upper area, so we kind of bounced up here a little bit. There was a bit of a macro decision, a little bit of macro. It's actually not quite as clear cut as that, but I was going to say that we had some volume going up here at a macro level from our low to our high. However, it's actually more from our high back to our low, but nonetheless, the volume did increase a little bit here. So there's still quite a bit of pocket of volume buying going on here, mainly from the retail investors, in my opinion. So interesting to kind of keep a good note on, good close eye on that. The other thing to bear in mind is we are setting up ourselves with some lower highs. Just looking to see if we've got any kind of divergences. It doesn't appear to have any major ones in there, so that's looking pretty good as well. So for the most part, yeah, I think we're just going to kind of bounce around for a little bit here on the hourly until we finally do drop back down. And I do think we're going to hit these targets, potentially even drop down lower. Once they are done, though, once we are completed with our 5th wave down, that's going to complete our 5-wave structure from the top, 1, 2, 3, 4, and 5, with 5 subwaves within wave 3. Then we are going to be looking for a 3-wave structural move upwards. Now, the 3 wave structures, 3 waves up, the structured move upwards, is a corrective structure. It is the minimum expectation I would have here is a zigzag pattern, meaning 5, 3, 5 come down afterwards. Okay, so we'll look for 5 waves to come down after we've completed our 3-wave structure move up. Now, the 3 waves up, I'm estimating to be between 22,540 and 24,550. Now, this is a pretty broad estimate. And the reason for this is there's a couple of different things. If it's a zigzag, an ABC, or a 535, however you want to talk about it, then the B wave's unpredictable. Okay, it could be nowhere near 22,500. It could be 21,800, right, for all I know. But typically we would assume 50%. We'd say about 50%. 50% would be about 22.54, okay, 540. And that's 50% of this entire 5-wave structure reclaimed from this move, okay? If we go deeper, however, it becomes more of a typical wave 2 structure where we get closer to the 24,550. Now, the obvious thing that we should concern ourselves with, and let me just come over to a blank area over here, right? Let's say we've got our first 5-wave structure just coming down here. Okay, we have our 3-wave structure moving on up, okay, and then we have another 5-wave structure just taking us down, okay? It's fantastic. That's a zigzag. That there is called A, B, C, or zigzag, depending on whatever terminology you want to use. Now, we would measure the distance of this. We'd take a fib and we'd measure the entire thing, right? It's a 100% of this move, okay? So starting at 1 all the way up to 0 here, that's 100%. We then grab this and we move it over to the top of our C wave, our 3-wave structured move. And then what we're looking for here is we'll be looking to see whether we can come down to the 1-to-1 ratio, okay? That there would be a typical ABC or zigzag, okay? The A and the C are usually the exact same size, okay? So that's a typical kind of thing to expect. Now, the problem that we have over here, okay, is that higher that we push to the upside, the higher that we go, 24,500, for example, with our 3-wave structure. So this C wave, for example, goes up here, and our A wave comes up here, for example, okay? Our 5-wave structure that would follow it would have to move, right? It would have to be up here. Now, the problem with this is that if we were to go ahead and move this up to that higher range, and we were to get a lot more momentum behind our price movements, and, you know, we were to maybe come down towards our 1.618 range, and we were to hit that range, then all of a sudden, this is no longer a zigzag, okay? Yes, it's 535, but the importance of this particular Fibonacci number, the 1.618, would change this into something different, okay? It would not be an ABC. In fact, it would be a 1, 2, 3, 4, 5. So we'd go with wave 1. This would be wave 2. This would now make it a wave 3. We'd bounce for wave 4 and we'd drop down lower as to wave 5. Okay, so there's two really interesting kind of scenarios that are going to potentially play out here. Now, both of these are things that we should be, concerned with, things we should be watching for, and, it's all going to depend on how high this is going to move next. Okay, so 5 waves down, we'll finish that off. Not really too worried about that. Significant bounce upwards. My kind of minimum expectation would be that 50% move, which puts us at about 11% bump on Bitcoin. The higher that this pushes, the more we are, or the easier it becomes, I should say, for us to hit the impulsive trigger of the 1.618. The easier it becomes for us to start trending down at a macro level rather than just a micro level. So there's a lot of things to concern ourselves with, and lots of ways that we can start talking about maybe going down into new lower lows. We're not there yet, okay, but we have to understand that the minimum expectation would be a zigzag, and a zigzag would put us between 17,622 and 18,910 in my opinion. It would put us somewhere down here. If, however, we hit that 1.618, we are in new all-time lows, or not all-time lows, but new lower lows, right? Based on where we were previously. So there's a lot of things to consider with Bitcoin. Nothing is set in stone. There's a couple of key patterns that are forming out now. These are patterns that we should be, quite cautious with and optimistic about what the future looks like as well. Okay, so there's a few things there to kind of think about. Okay, so that's Bitcoin. Let's move on to Ethereum as time is progressing here. And let's take a look at what's been going on with the Ethereum data and then jump into the Ethereum charts as well. So we'll keep this one nice and brief and give you everything that I think you need to know. So let's start things off by taking a look at the Power BI report for Ethereum. Now, again, what I've done is I've taken Glassnode Studio's data, just done this for Ethereum though instead of Bitcoin, and I've API'd it into Power BI so I can cut my own reports. So basically what we've got here is the inflows and the outflows, 69.27 million inflows, 70.87 million outflows. We can see that the balance of Ethereum on exchanges has been dwindling down, although there was a huge chunk of loading up exchanges ahead of the recent pump to the upside. This is the net change difference as a 30-day average of the difference between the inflows and the outflows, again, just like Bitcoin. And we can see here that we had a huge amount loaded up onto the exchanges, a lot more than has been coming off of the exchanges. So a pretty interesting kind of piece of information and well worth understanding the difference between what's been going on with Bitcoin versus Ethereum. Ethereum has got a lot more bearish kind of things going on here, considering the amount of Ethereum that's landed on the exchanges versus the amount that's come off of the exchanges. Long term, this is bad for Ethereum because basically it means that it's going to be even harder to push the price to the upside, and it will take a lot more demand to swallow up that much more supply, right? So just be aware that the more supply that is available on exchanges, the harder it is to push the price to the upside. And we have, of course, seen the price push up pretty significantly despite this. So we have to understand that what would happen when that demand disappears isn't going to be pretty. So let's go ahead and take a look at the inflows and the outflows. Now, the inflows and the outflows on this chart, you can see there's a couple of spikes above the line, above the inflows line. So basically we've got red as our inflows, green as our outflows, and for the most part everything's matched up 1-to-1. It's pretty steady, pretty level, but there's a couple of spikes to the upside, right? And we can see those within the green areas here, for example, here, and over here as well. But for the most part, there isn't actually too much worth noting. Yesterday we saw 156,000 Ethereum go on to exchanges, with 182,000 coming off of exchanges. So a little bit of accumulation, but hardly anything worth noting. Okay, let's move on. Let's go and get the button to click there. So we've got the whales, the sharks, and the dolphins 90 days chart for the wallet addresses and the price action of Ethereum. Okay, so again, just like we have for Bitcoin, however, these three wallets act so similarly, it is a little alarming. And what I mean by that is they all seem to act emotionally rather than logically, whereas the Bitcoin guys, they're definitely very strategic about how they interact, right? But yet here we have just emotions just running riot. But let's talk about this, right? Dolphins, 100 ETH or more, retail investors. I look at these as the high net worths, but again, that could be vastly different. We'll see. Let's see, right? So basically, we got the price in the dark blue line, and we got the wallets in the light blue line. So basically, the price pulls back down. It's a buy the dip opportunity. They continue to buy the dip. Hits the bottom, and everyone starts talking about the bottom being in. Fantastic, we'll ride this up massively. Every dip is an opportunity to continue buying. Every pump is an opportunity to keep pumping the price up higher. A little bit of stability here, a little bit of panic. Buy the dip, buy the pump, buy the dip, buy the pump. It's dipping, we best buy that, right? So basically you're here, you can see that they don't really care. They're just buying, they're just FOMOing in. This thing's going to the moon. I want to buy as much as possible. Over the last 90 days, what have you seen? You've seen irrational, illogical buying behavior from retail investors. Now, anyone who was buying at the bottom here at 995, fantastic. You're in profit still at this particular point in time. Maybe it's time to think about your positions, right? Obviously, I'm not a financial advisor. I can't suggest what you do and do not do, but it's interesting stuff, right? The price has moved back pretty dramatically here. Okay, this is the first set of pretty large structural moves to the downside, in my opinion, for Ethereum. So we should be aware that accumulating this particular dip might not be the wisest of moves. We can then take a look at the sharks. Okay, the sharks for Bitcoin are aggressive in following the price action, but not these Ethereum guys. No. What do we see? Well, we see the dip. The dip's coming in. They're going to buy that dip. They're buying that dip. Panic sell just about here, and dips a little bit more. So they're best panic sell some more. The bottom comes, the bottom goes. They're still panic selling. Oh, wait, no, that's the bottom. Okay, let's buy. Let's buy that dip. We'll buy that dip. We'll buy this pump. We'll buy that dip. We'll dip a little bit here. We'll continue to buy this dip. This looks like a pretty good dip to buy. We'll continue to buy this dip. Oh, it's pumping. We'll buy that as well. It's dipped a bit. We'll buy that. We'll buy. This is a big dip. We'll buy that as well. Basically, emotions. Very much the same as the Ethereum dolphins as well. This thing's going to the moon. Every single time this thing moves in price up or down, I'm going to buy it, and I'm going to be throwing a silly amount of money at it. That is what these two things are telling me. But you might be thinking to ourselves, well, the whales can't possibly be doing that, can they? The whales are worse. Let's take a look. The 10,000 Ethereum wallet holders. These are large whale holders of Ethereum. These are wallets that are holding such significant amounts of money, they should not be acting emotionally. They should be more calculated in the same way that Bitcoin whales are. Right? Essentially, the goal when you have money is to, contain that wealth, keep that wealth, and make more money with it. Right? It is not to be throwing it away needlessly. Let's take a look. So price fluctuations. Price starts to dip down. They start to come out a little bit, but then they realize they should probably buy this dip. It's a buy the dip opportunity. Then they realize, no, actually, this is probably not going the way that we think. So they start panic selling. They drop down pretty significantly as the price hits 1200. They think that must be the bottom, so we'll start buying. Nope, it dips a little bit more. It hits the bottom, and they bought that entire dip to the bottom. And then they start panic selling as it starts to go up in price, exit liquidity and all that. Then they go up a little bit at the top here, okay, right at this point at 1,229. No, we're going up now. We'll buy. So they buy, and the price goes down. Oh crap, the price went down. We'll panic sell. So they start selling as the price starts to go back up again. Then, of course, they're like, oh no, okay, the price is going up. We'll buy. They buy, the price goes down. Oh crap, we'll panic sell again. They start selling. Oh wait, the price is going up. We'll accumulate. No, that can't be right. We've been caught in this trap many times before. We'll sell. They start selling and they drop down, right, to their lowest possible point in terms of the count of wallet addresses for 10,000 Ethereum. This was when the price was $1,636 according to CoinGecko. And this is where things get really emotional. Oh crap, the price is moving up. We best accumulate. So they start buying, buying, and buying, and buying, and buying. Oh wait, they got to the top here, the local top, at 1,900. And they stay sideways. Nope, best panic sell now. And now they're riding this thing down. And what's really odd about this is the entire behavior is so reactive to price movement. It is ridiculous. This is for all three of these brackets of wallets, right? It's illogical to have that much wealth and act so irrationally, which makes me believe that these guys, these 10,000 Ethereum wallet holders, are retail investors that got really lucky early on with Ethereum, and they're trying to move things around a bit, trying to play. I feels like there's an actual wallet, whale wallet count of Ethereum out there somewhere, and I just need to find it because it's definitely not these guys. All of these wallets are acting exactly the same way, which then brings us on nicely to what's been going on with the price action of Ethereum, right? Because this stuff is mapped out so beautifully in terms of the price action of Ethereum. So what do we have? Well, we had a three-wave structure going up, right? Just like we had with Bitcoin, until this dash line. This dash line here represents when those 10,000 Ethereum whale wallets started accumulating heavily. Okay, so this is this little point just down here. Okay, this is where this blue line starts to really rapidly move up. And that is this dash line here. So you can see that I took the lowest possible point right down here. Yeah. So they didn't buy down here. They didn't buy ahead of the curve around here. They were doing all sorts of random nonsense this side. And then they started to accumulate over this area here. Now you can see that we're already lower than this price action. Okay, we're actually a little bit higher. We're probably about the same kind of level that a lot of the accumulation happened. But basically this point is what triggered a 5-wave structure. Okay, so if they didn't do this and they acted more logically rather than emotionally, they would not have triggered a 5-wave structural move upwards, which is now still valid. Okay, now with 5 waves, as I said with Bitcoin, they're trends, right? So we had a 3-wave corrective structure that turned into a trend up, but it was driven specifically from these guys here accumulating this. Okay, and creating this fake kind of pump to the upside. And that could be exactly what's going on there. But nonetheless, they got to the top and they start to come out. And I said quite early on that the biggest risk to Ethereum right now is the emotional overreaction of those 10,000 Ethereum wallet holders. And I think that's kind of exactly what we're kind of waiting to kind of see the fallout of. Now here we can see a 3-wave structured move to the upside, and I can go grab this and just move that up here. Okay, so we can see our wave 4 being here, but let me getting a little bit ahead of myself. So we had this top and then we started to pull back down. So we saw the top come in, we saw the reversal. The reversal is a micro trend to the downside. Okay, we're trending down. Now with that trend to the downside is obviously spurred on by the selling pressure that has now occurred from the Ethereum wallet holders up this higher end here. Okay, so we know that those guys are aggressively selling. If I actually push the right button there, so these guys just here, right? These guys are selling off, and basically we're seeing now is that pressure was created a 5-wave structure down. So in the same way that they created a 5-wave structure up, they've also created a 5-wave structure down. Now the expectations are zigzag as minimum. Alternatively, we are still in our 5-wave structured move to the downside. So there's a few things here that we should be articulating or should be aware of. Let's first talk about the microstructure. Okay, so our microstructure is right down here, where we are estimating our lows to be in somewhere in this little range, right? So we're talking about 14,036 to 14,089 based on this recent high point. The higher that wave 4 goes, the lower that wave 5 goes. All of this is still a potential wave 4, but a wave 4 can't be 5 waves. A wave 4 has to be 3 waves, meaning that we have to see at least an ABC zigzag to finish this off. However, wave 4 is also not allowed to cross wave 1, which is marked down here at $1,276. So under a zigzag structure, we could potentially invalidate our wave 4, meaning that we would invalidate our wave 5 higher, meaning that we are still bearish and we're looking at 526 to 724. Okay, and that's a 5-wave structure, which would be 53535. So all in all, you know, I think the key to this whole entire Ethereum mess is those 10,000 Ethereum wallet holders. Whether or not they're going to continue to act emotionally, which I have no reason to think otherwise at this point. We're going to see 3 waves up once we have this low, and then we're going to pull back down. Okay, and I think we're going to be going after the $500 to $700 ranges. Now, let's take a look at our Stochastic Rsi. We've got a little bit of momentum on the hourly, but the 4 hourly is overbought. The 8 hourly is overbought, the daily is okay, and the weekly is overbought. So we're looking for some volatile movements today. We might push this up a little bit higher here. We've got so much overlap. This is nothing more than a 3-wave corrective structure. So much overlap here basically indicates to us that we can't possibly be trending up. So don't misunderstand this as a potential trend. Any potential moves that we have here are to be deemed short-term because there is nothing here that is telling us that we are moving up in any major significant way. However, just for clarity, invalidation would be set up here and it will be set on this particular wick. So let me just grab hold of this one. Invalidation is $1,853. Okay, so if the price did somehow make it up there, then we could say that we're not dropping down into this 1400 to this 1436 to 1489 low. Okay, instead we'll just be moving up a little bit, and we'll have to see what kind of structural moves are in there, and we'd have to recalibrate this side. But for the most part, everything is looking okay for Ethereum in terms of a bearish structure. Not so much the bullish. The bullish is not looking good under a 5-wave structural drop that we've had here, and the panic selling that is probably still unfolding with the Ethereum guys. Okay, so not too much more I can really say about Ethereum. Just kind of sitting back, waiting for the lows to come in. Once those lows are in, we can then move up. Once we've moved up into a 3-wave structure, we can move down into another 5-wave structure, and we'll just slowly work our way towards our low area of $500 to $700 Ethereum. Same with Bitcoin. We're working for that little bit more to the downside, and then we'll be looking for a 3-wave structured move upwards. Guys, I'm going to leave this video right there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Remember, join us in Discord. We cover a lot more in Discord. Links are in the description down below. And until the next one, have a fantastic day.